world. And as you know, this conflict has contributed to supply shortages, soaring energy prices, and deepening concerns about long-term energy security, especially in these times when the U.S. is looking for reliable, long-term supplies of energy to meet domestic demand. We believe it makes no sense that you have to look to jurisdictions like Russia for your oil. Canada is one of the United States' oldest trading partners. We share the longest undefended border in the world. Canada's government is a stable, rules-based democracy with an incredibly strong and transparent regulatory system. We are already plumbed into the U.S. with significant pipeline infrastructure, although we could always use more. We also happen to have, as Mark said in his comments, the third largest oil reserves in the world. And now, as Mark mentioned, through the Oil Sands Pathways to Net Zero Alliance, we have a well-defined plan to start reducing our emissions from production to achieve net zero by 2050. Working together with the U.S., we believe that Canada's oil sector offers a ready-made, sustainable solution to energy security for all of North America. And with that, we can probably get right to your questions. Thanks.
Yes.
Hi, Caroline Evans, Energy Intelligence. I hear you talking a lot about supplying world markets and energy security. Does with the U.S. now banning Russian imports, does that make the case? Does that revive the case for Keystone XL? If so, would it be Keystone XL as we know it, or would it look maybe a little bit different?
Maybe I'll start. I have a long history with Keystone XL. I mean, look, Mark and I we're energy producers and energy refiners, and I think we have to be a little careful about making proposals with respect to any one pipeline project. But I think the Keystone XL saga, more than anything, just shows the importance of a very thoughtful dialogue about energy infrastructure. You know, these projects, I began working on Keystone, I think it was over 12 years ago. And these projects now take decades to come to fruition. And I think anybody, when they're looking at the future energy needs of any country, any jurisdiction, you have to be very, very thoughtful about the time it takes to permit, build, get these facilities into service. And I mean, now the United States is really paying a price by a decision, I think, that had it been made a different way, the U.S. would be well supplied by Canadian oil right now.
Question at the back? No, it's you.
Yeah, thanks for your question. I think in this price environment, every single producer is trying to find opportunities to maximize the utilization of their physical assets. Obviously, we tend to be a long cycle business, but what I mean by that is for us to significantly boost production, it takes years to go through the regulatory process and to construct the facilities. But once they're on, we tend to have our production go on for decades with little to no decline. So everyone is looking for opportunities to debottleneck the facilities. We do have some facilities this year, like Fort Hills, that are ramping up their production this year, and we've seen that just in the last couple of months, so I think that can help. And then, so I do expect that Canada will increase production by a few 100,000 barrels this year, which certainly can help. And then logistics, getting that into the United States can be a bit problematic. Some of that might end up going off the West Coast. But in the absence of pipelines, the countries have traded off of rail, essentially, moving oil back and forth using rail. And I would expect that in the near term, that will be the best opportunity for us to increase beyond current pipeline capacities. Turnaround schedules generally are driven by a focus around how long can we run. Nobody likes to take their facilities off. How long can we run before we need to take these facilities down to ensure the integrity of the asset and to be able to maintain pumps and rotating equipment and instrumentation, all the various pieces. So there may be some minor adjustments to it. I'm not expecting any major changes just because no one's going to put their assets at risk from an integrity perspective.
I think there's another one back there. No? Are there other questions? What? Oh, sorry.
Yeah, this is just with Bloomberg. Are you the most optimal within right now, getting the oil in $58? How does this compare? How does this compare to past?
Well, I just say the first thing is the one thing about our industry, it's so incredibly cyclical that anytime we're in a good pricing environment, we're already planning for the next very bad pricing environment. So although it certainly from a pricing perspective, we're obviously in a very buoyant price environment. My expectation is, as Mark said, we're going to see. At these kind of prices, I think every possible barrel of production is going to come on. And I also think these prices will do what high prices generally have done throughout history, and they will impact demand. And I think we'll find in a relatively short period we're down to a much more modest price environment. I don't know if Mark would have anything to add on that.
Well, I think the only other thing I would say to it is, and having watched the industry for most of my career in detail, every single company that's representing the 6 companies that are part of Pathways, every single one of them is generating more cash flow out of the oil sands than they ever have in their history, partly due to what I said earlier, is that over the last decade, we've been able to reduce the costs and cut the cost structure approximately in half. Canada's oil sands right now is, depending on what product we're producing, is somewhere around $10 to $25 a barrel US to actually produce the barrel, again on the flavors, and probably somewhere in the neighborhood of $5 to $15 US a barrel on sustaining capital. And with that, we basically can keep these volumes flat literally for decades. That's one of the incredible benefits associated with the production we have, because we literally have decades and decades and decades of resource available.
Here, oh, so actually the back. Yeah.
With regard to the alliance, is the regulatory or tax credit environment where it needs to be to move forward with the foundational project on carbon capture, or are you expecting support changes at the provincial or federal level talking about whether
Yeah,
it's
you can go
set
ahead.
up or what you want to see change?
Yeah. Great question. I mean, we cannot do this without the governments for a couple of reasons. One is that the Alberta government actually controls the pore space where we want to sequester the carbon, specifically on carbon sequestration. So we've been working with the Alberta government about where is the location where we can sequester the carbon, and we have the geology for it. Thankfully, Alberta is one of the best jurisdictions globally for sequestering carbon. So we see that as a huge advantage. And then we're looking for the governments, all of which, both provincially, federally, and the industry, are making a lot of money off the current environment. We're asking all of these groups to work together to create a fiscal framework where we can co-invest the proceeds from the industry to be able to drive down the emissions and, again, create this long-term source of reliable, global leading ESG at net zero by the time we get to 2050. So we are looking for that through investment tax credits. You saw the federal government in Canada in the last budget actually highlight that they were going to support carbon sequestration with tax credits. And we're expecting to hear what that looks like coming out of the next federal budget. And I just was listening to Premier Kenney from the province of Alberta talking about his verbal support for moving the project forward, and we're working with Alberta around what their role might be. This is about keeping the industry competitive. You've seen, like if you take Norway as an example, you're seeing the Norwegian government come in and invest 2/3 of the capital and also pay and contribute significantly to the operating costs for the first 10 years. We're looking to stay competitive with these other governments and joint ventures that are happening globally around implementing these technologies and decarbonizing the industry.
The middle there?
What are your, or do you have any updates on some of the projects off of Eastern Canada, offshore Terranova or West Right Road, and just any general thoughts on the offshore play right now, given where we are, in the world and also in the higher oil prices?
Well, I'm certainly happy to give my thoughts, and Mark has more experience on the East Coast than I do, so I'm sure he may have some thoughts. But and it certainly with respect to our projects, we are taking a very hard look at those projects that we acquired when we acquired Husky Energy. I would say the present commodity price environment, is certainly something that we take into account. But as I said earlier, in this industry, you just can't make risks on investing at the peak of the market with expectations that those prices are going to continue. We really look at these projects from a resiliency case. They have to return their cost of capital at low, call it bottom of the cycle oil prices. But we're in the middle of doing a great deal of work on that, and I'm hopeful that we'll be able to get something done.
Yeah, and maybe I would just add to that, because certainly that would apply to West White Rose and other projects. The one project that we have jointly sanctioned along with our partners is the Terranova project. The Terranova project was to refurbish the FPSO and actually produce another just under 100 million barrels in the coming decade and extend the life of that asset. It's actually in Ferrol, Spain as we speak, in dry dock, getting refurbished for that, and we're expecting it on production by the end of this year. And so that is an asset that we're halfway through the investment cycle, and will come back into the production portfolio here in 2022.
And as far as the recent news around Lady Nord, some complications on the regulatory side, how is that playing into your?
Well, obviously we're a partner in Beta Nord, and I would say we are anxiously awaiting the federal government's decision on the permits. I would observe that Beta Nord represents some of the lowest GHG intensity oil on the planet, and it sits very, very close to Western Europe. So I would be surprised and disappointed if we didn't have a positive decision there, but we'll wait for the government.
Carolyn?
I just had a question on choosing a location for carbon sequestration. Just kind of what the process is like for that. Is that something where you have to shoot seismic? And do you have a timeline for when you'll find a spot?
Do you want to take that?
Yeah, there's quite a process. Some of this has been known for quite some period of time. So a number of companies and such have done a lot of geological work. That for us in Pathways, probably some of the most sought after pore space in the world is in Edmonton, Alberta, where it seems like every project that you can imagine, from dealing with refining and industrial emissions all the way through to blue hydrogen projects and such, are competing for that pore space. Pathways intentionally is following the geological trend. On our website that Mark had spoken about, you can actually look up, but we're following the geological trend essentially to collect all the CO2 from all the operations, and the pore space is down in the Cold Lake area. And so and in fact, if you go onto our website, it'll actually show you the space that we've asked for to sequester the CO2. But yes, there's a bunch of geological work and technical work that's required to determine, is it good pore space? And that work's been done. So we're in the process of, we've submitted our interest in it, and now we're in the process of submitting our detailed application. We're expecting the province to make a decision before October, and in the meantime, we're in the process of doing the environmental work and regulatory work to be able to push forward with the infrastructure, which is the wells and the pipeline and that sort of thing.
Maybe I just add one thing to Mark's comments, and this, as Mark said, I mean, this part of North America, you probably could not find better reservoir for the kind of work we're planning on doing here. And this is a number of reservoirs of a magnitude that could literally store almost 100% of the carbon from the oil sands for decades. These are truly large scale storage reservoirs.
Great. Are there any more questions?
That's great to follow up. How quickly do you think the carbon capture technology can scale up to the kind of targets that you guys are looking at?
Yeah, and maybe just to clarify, I think when you ask that question, you're talking specifically about capture. Because capture is the issue about sending CO2 through a pipeline and actually pumping it into the ground is not the challenge. The technical challenge on this is how do you capture it? And we have a spectrum of CO2 emissions that go from about 4% CO2 through to 100% CO2. 100% CO2 is very easy to capture and sequester. 4% is very hard because it's such a diluted stream. And so there's a whole tech set that fits along this entire spectrum, and the further you get to the more diluted streams, the more challenging it becomes. Very high flow rates of low concentration is the most difficult part associated with it. So we expect when you go through all of the various facilities that we all own independently, that we'll have a variety of different technologies that are applied to capture it. So the places where we have hydrogen plants, it'll be one set of technology. Where we're doing cogens or ones through steam generators, it's a different technology set. So part of this is we can learn faster by sharing our information. About a decade ago, we created the Canada's Oil Sands Innovation Alliance, where we decided that amongst our companies, we would share intellectual property. We've shared about 1,100 different technologies worth about $1.8 billion. And that gave us a framework for us to be able to share. The whole point of it was we should go faster in improving. We should drive down the cost and accelerate the pace at which oil sands is improving. That's proven out when you look at the environmental performance and the progress we've made. This is actually taking it one step further. We're jointly investing in the infrastructure that's required so we can go even faster and even at a lower cost. That's the plan. So there's a lot of work on the technology front, but we're very excited about the opportunities in front of us.
Yes?
With oil prices as high as they are now, does it make sense for the Canadian government to subsidize as much as 100%
Well, I'll take a shot at that, and I think the first thing I kind of point to the comments Mark made that the kind of work we're talking about doing and the investment we're talking about making is really unprecedented, and it's going to require significant contributions from the industry, contributions from the federal government, the provincial government, but I would remind everybody that as I said, we're in a high price environment today. I have no doubt that we'll have gone through 4 or 5 commodity price cycles by the time our facilities are actually operational, and no one really knows what the price of oil is going to be over the next decade. What I will tell you is we're talking about an investment of somewhere in the range of $2.5 billion a year over 30 years. That sounds like a lot of money, $75 billion-ish over that time period. But that will also be protecting what we would estimate to be $3 trillion of contribution to the Canadian economy from the oil sands over that time period. And we think that kind of prize really does deserve the efforts and support and collaboration of both levels of government and our industry.
Yeah, and maybe just to emphasize a couple of points that when Alex talks about $2.5 billion a year, that is the joint total amount that the industry and the governments would be investing. Right now, if you look at the $3 trillion of economic benefit to the Canadian economy over the next 30 years, about $500 billion of that accrues to the governments, the provincial government and the federal government. So they're generating an enormous sum of money off of the industry. At higher prices, obviously, those numbers go way up. We're talking about the governments and the industry, all that are benefiting from high prices, co-investing a portion of the money that they're generating from the industry to make the industry competitive and resolute for the future.
Great. Are there any other questions? If not, thanks very much. There are, if anyone doesn't have the press release, they can get a hard copy. And if anyone wants to do follow-up interviews with Mark or Alex, just tap me and we'll set that up. Thank you very much.
Thank you.
Great. Thanks, everyone.
Many of these instances, all these technologies are in their infancy, literally in their infancy right now. And I think you're going to see continued improvement in terms of the efficiency of the processes and the cost.